Gold prices chop around $1,600 an ounce. Now, Tim, we've seen gold move with the euro, with stocks inversely to the U.S. dollar. When do you expect gold to decouple from that trade and trade on its own as a safe haven?
I think it continues to be a safe haven. I don't think that changes at all. I think what we've seen is that gold has been tracking along with other markets. It's been very, very thinly traded. Volumes have been low pretty much across the board.
But wouldn't you argue that if gold's moving with stocks, it's in essence trading as a risk asset and then not as a safe haven?
You know, people talk, risk on, risk off asset. And I think that when you're specifically looking at gold, gold is still a safe haven. Gold will continue to be a safe haven. It just temporarily tracks along with other markets from time to time.
Now, we have seen some really terrible demand figures out of India. Imports for the first quarter could be half of what they were last year. How big of a drag is this going to be on the gold price, or is it factored in already?
I think to some extent it is factored in. Perhaps that's why we didn't see gold hold up quite as strong as many people expected it to in Q4 last year. Interestingly enough, I think that the information released by the IMF just today or yesterday that the central banks have acknowledged buying 344 tons of gold so far last year, because the data's only up till November last year, so we don't know what happened in December, would have picked up some of the drag from the lack of buying out of India. So
do you expect a retest then of that, say, 1530 level that we got to last week, or do you think that there's substantial enough buying right now to avoid that?
You know, China's had an extended vacation. India's obviously a very important jewelry market, the largest jewelry market for gold, and any drop in consumption is obviously concerning. But I think when we look to Europe, the news of UniCredit's rights issue, and we look at what else has been going on around the world, we're a 4-day week here in the US. I think volumes are still going to be light, therefore volatility will stay with us for now.
So perhaps if the fall off of demand in India accounted for gold's inability to really sustain new highs, will it also cap gold prices? Will we not then be able to make new highs this year?
There's a few kind of, on the geopolitical horizon, we've seen Iran asking the US to stay out of the Straits of, to stay out of the Gulf. We saw that potentially, along with the rebound in some of the data we saw coming out of Europe and US yesterday, affect the oil price. Perhaps it affected the gold price yesterday as well. So I think gold's strength is its safe haven, and geopolitical uncertainties are going to help gold trade higher.
So then, to that point, have you seen any inflows or outflows over the last few weeks?
Volume's very, very low, so no, we haven't.
All right, thanks, Tim. I really appreciate it. So don't give up on gold quite yet. Tim says the safe haven is still there.